Hello traders, in this video I would like to address the importance of Fibonacci trend inception, Fibonacci trend reversal, no matter what instrument you trade. This is FOMC last week. If you missed the events in the trading room, please browse YouTube channel where you can find that phenomenal, stunning reminder how crucial Fibonacci support is. Absolutely never ever ever ignore bright pink line. This is key support, not the place to short. This is where buyers stepped in from in overnight session. What's been the problem with the US market in the last few days? We reached ultimate high, but we never closed at that level. We've been struggling with bullish weakness for 3 days, nothing but pain and torture in US session. When finally markets start selling off, except not the place to short. Again, overnight session. Where is the selling pressure coming from? Fibonacci reversal zone. So if you understand the concept of key support where institutions buy and you as a day trader buying with them, problem is reversal zone in front of you. Bullish trend exhaustion. And if you trade 5-minute chart, it's not a problem. Identical formula remains. Let's convert this chart to 5 so you can see. It's all the same. This is the market in the last week. Stunning and flawless. Not the place to short near. Not the place to enter into. Agree? FOMC all identified in advance. And this is bullish rally in European session. So price is here by the end of the day in exact same place as price was at the time of FOMC. Rules are met, take a trade. Rules are not met, do not buy this market. This is key day trading chart where you see proprietary Fibonacci levels that you can install on any platform you choose, but if you would like to use NinjaTrader software, first time ever it is available. Identical formula applies no matter what you trade. Buy at support, sell at resistance. And again, if I would bring up exact same chart on S&P weekly, there is no surprise. This is key Fibonacci resistance. This is why price struggling so much. All of this present in the room for the last few years. If this key support respected, we're stuck in bullish weakness, but this is where institutions will be again and again and again. And if I would browse down memory lane, if I would remind you the power and accuracy of Fibonacci, this is what played out in the last few years. This is exact same level on S&P as key Fibonacci resistance. Do you remember 2016? Shock or not? What do you see ahead? 2300 will follow. At the time of election, stunning bullish rally picks up the steam. 2300 reached. Shock or not didn't mean a thing if Trump or Hillary wins the election. Price action told us. Trend inception 1800, key resistance 2100. 2300 is next. Price continues on until 2500. Shock or not. And here is S&P. Start of 2018. Do you remember how crucial 2300 was 2016, 2 years prior? Do you? This is exact same level that was key resistance 2 years prior, where buyers stepped in from in 2019. Here we go. Famous 2300 number becomes trend inception, Fibonacci reversal zone, and is posted weeks and months in advance. 2800 will be a minor pullback. 2900 is a key. And that's exactly what played out. Absolutely no surprise. Next. All in advance. Never ever ever after the fact. There is no surprise where you saw spectacular pullback coming from. Absolutely expected. And that's what price does. Every day, every time. Exact same dance. And if you understand and respect the rules, you know extremely well. We continue being stuck in this area. Ultimate high is what causing a problem. But if you understand where ultimate trend inception is, where you understand where ultimate resistance is, you look to buy with institutions. All in advance. Never after the fact. And that's S&P now. 2900 is everything. If this support respected, buyers remain in charge, but stuck completely. So if markets will be very slow throughout summer months and you understand how dangerous choppy and corrective markets are, you are in excellent shape. 2900 respected, buyers in charge. And if I would take a look on exact same chart on Tesla, what do you see? Exact same support, famous support on Tesla 255, exact same range 388, trend reversal. This is from 2016-17. This is Tesla many months later. What do you see? Key support respects. It doesn't matter if it's SEC investigation or not. Doesn't matter what Elon Musk smokes or not. Institutions keep buying at support, institutions keep selling at resistance. So if you're trading long term or if you're selling short term, identical strategy remains. Sell at reversal zone, buy at support only when rules are met. And that remains the key. There is no good news on Tesla, none are present. 3 years later, Tesla starts crashing through 255 lifeline. 3 years. Finally out. Boom. So why in the world is Tesla rallying? Is there a rhyme or reason? Of course. Fibonacci said so. Shock or not. Stunning trend inception. Take a look at Tesla now. So why in the world is Tesla rallying? Simple. This is proprietary Fibonacci trend inception where you absolutely expect reversal. What would be war zone on Tesla? 249. If Tesla is struggling to break through, buyers are worthless. But this is exactly where the pullback coming from. All for a very good reason. Nothing in this market is random. Market is flawless Fibonacci puzzle. All in advance. Never ever after the fact. And that's S&P now. Just like 255 was lifeline on Tesla for 3 years, key, proprietary, Fibonacci support. This is exact same number now on S&P. So here we go, traders. This is oil. Take a look on this chart on oil. Ultimate trend inception. December 2018, this is the reason why oil sold off from, and this is the reason oil rallying, and this is the reason oil will be struggling. Everyone seeing this? This is oil now. All playing out in front of you. But if I walk down memory lane on oil, shall we take a look? 5 years prior. This is exact same level 2015. Do you remember oil at 112? Is anyone surprised? In the course you learn, this is key Fibonacci target. Shock or not, this is oil now. Let me remind you a few other things, how important and crucial this level is on oil. When oil crashed from 112 until 29, what was this? Trend inception. Rules are met, take a trade. Shock or not, where are buyers coming from? Next. Ultimate place to buy, proprietary Fibonacci reversal zone. Oil in pain for weeks at key Fibonacci resistance. And if I scroll forward another 2 years, what do we see? Oil at key Fibonacci resistance, bullish rally overextended from trend inception. What's in front of you? Key Fibonacci level, trend reversal 77. In the course you learned that when price comes to bright green line, you adjust your trail and you take the profits of the table, correct? And this is what starts playing out on oil. Pullbacks. Shock or not, all in advance, as expected. To the downside, this key green level, Fibonacci support that was crucial, Fibonacci resistance. What do I say? This resistance is out, expect sell-off. 55 is next. That's exactly what played out, with 55 to follow. And if I push many months forward, are you surprised what played out on oil? What is key support to the downside? Above 40. Is that where oil rallied from? Of course. What was the problem? Exact same resistance as 2 years prior, where oil was frozen at 54.4 a year. Day trading not your cup of tea. Use everything you learn for long-term investment decisions. And that's a rally on oil. Again and again and again. And that's a sell-off on oil. And if I come to oil on this beautiful June 26, 2019, you see once again, all in advance, never after the fact. This is a problem now on oil. Identical Fibonacci level. Right now it's a different number because price action structure had changed. Understanding and respecting that is a key. Here is gold. This is gold in 2015-16 at ultimate trend inception. Do you remember gold at 1100? This was the only thing that was stopping gold for 3 months. This resistance is out. Gold heading higher and higher and higher. But the famous green line is a problem, as expected. So, if we are to take a look on gold right now, this year, shall we? This is gold, 2018-19. Crucial Fibonacci support, 1277. This is gold traders, bullish rally on gold overextended. We're at institutional Fibonacci reversal zone. Knowing what to do with your position is the key. And if I would walk down memory lane and I would take a look on euro, what do you see? This was euro in 2014. Do you remember euro at 140? My goodness. Those are good old days when euro was so high. However, euro crashed from this level until, shock or not, key Fibonacci support 105. This is exact same place where euro rallied from, where S&P at 2900 number. This is euro next. Skyrocketed from 105 to 125. Was not able to break through. This was euro 2018-19 and this is euro recently. At key Fibonacci support, not the place to short. Sell off on euro overextended. This is euro traders. Stock at key support, not the place to short. If euro will break through 111, will collapse to 105, but this is key resistance in front of you on euro. If euro cannot break through this level, buyers are weak. This is a channel on euro. So as important as 105 was on euro, as important as 255 was on Tesla. This is exact same level. Knowledgeable trader watches very carefully on S&P 2900. 2900 respected and obeyed. 3000 is next. 3000 to 3060 will be a major problem. Next, 3300. After 3300, 3600, 3800 next. Knowing what to do with your position is the key. So if you would like to join us in the courses traded on Wall Street, if you would like to enjoy proprietary Fibonacci method that give you ultimate precision, ultimate accuracy, if you would like to join on different platforms, different instruments, or first time ever available Ninja 8 software with scanners, with trade identification, with stop, with target, in live classes or in private mentoring, I look forward to working with you. More and more updates to come on the website. Pretty please review. The most important section of the website always what students say, what students do. You can view videos, you can see students' results. And after reviewing the information on the website, if you have any questions, never hesitate to contact me. Simply click on Contact Us page and call or email me. Thank you, traders. Thank you so much. 2900 is key.